What's up, guys? This conversation is with Alyse Killeen of Stillmark. She's a Bitcoin venture capitalist. And in it, we talk all about everything from self-custody to mining, what she's seeing on the ground, and where capital is flowing in that ecosystem. I really enjoyed this conversation with Alyse, and I hope you guys enjoyed it as well. Don't forget that these episodes are brought to you by FTX US. You can click on the link in the description to learn more. Let's get into this episode with Alyse, and I hope that you guys enjoy it. Alyse, think you're here. How are you?
Good morning. How are you?
I'm doing fantastic. People are already upset. There doesn't appear to be a cat that is going to make an appearance.
There's not going to be today.
That is strike one. What are you most interested in right now? Like as you look at the Bitcoin market, obviously everyone seems to want to talk about the price just because it's being somewhat volatile and there's uncertainty of the future. That's probably less interesting from like what's being built. What are you seeing right now that you're like, man, if people understood, this specific kind of theme, they'd be surprised?
Well, there's a ton. On my side, I think I'm having a lot of conversations around mining and the opportunities that will exist for entrepreneurs and also just frankly for people, retail folks, to participate in mining and to acquire Bitcoin through mining rather than purchase. And we know that historically it's much more efficient in terms of cost to acquire Bitcoin via mining. And so every cycle, I promised myself that it's the year that we're going to get, friends and family involved in mining. And every time we get too busy and then we look back on the prior cycle and think how silly it was that we didn't spend more time and attention on figuring that out. But what I'm hopeful in this next sort of batch of companies starting now in the bear market and recession period is that we see companies emerge that can better facilitate retail's participation in mining. And who knows, maybe in a decade, we see mining as part of a diversified portfolio, even outside of folks that would consider themselves hardcore Bitcoiners.
And when you start to think about mining, there seems to be a ton of conversation around mining death spiral, as there always is in bear markets, miners selling their Bitcoin that are publicly traded. How much of your focus is on what I'll call like more institutionalized or kind of commercial mining versus the individual just buying like a single machine and kind of plugging in at their house or something like that?
Right. So, of course, we're working as a generalist fund in the Bitcoin space. So we invest across the board. And some of the pain points for miners are similar for companies of all types. And we're seeing one now, which is, effectiveness of treasury management and planning finances and planning for various scenarios in treasury management. And so miners, of course, have been primarily funded by debt. And as a result of the debt markets drying up, we see miners needing to sell into a down market, selling BTC. But this isn't something new, right? We've seen this in prior cycles. And so it's just something that we need to get through. And of course, it also, when companies have financial pressures, it opens up new opportunity spaces, right? So we're looking to see if there'll be acquisition activity, if there'll be opportunities for new entrepreneurs to come in and to do things more efficiently or effectively or to serve clients, whether those be enterprise or institutional grade clients or retail folks better. And so that's sort of, it's early, right? We're sort of early into this, more like chaotic dynamic in the mining space, controlled chaos. And so we're just looking to see how that shakes out and if there's opportunities for innovation there.
And when you see the mining businesses themselves, obviously the oil and gas industry, the kind of energy producers outside of Bitcoin, they've become major players in a variety of different ways. Everything from down, I think there's a Houston oil and gas kind of Bitcoin mining like meetup that goes on in that area, all the way to we've seen reports of some of the major energy producers in the United States, maybe doing pilots, I think is kind of how they've been framed as they're kind of testing stuff out. What are you seeing there with like the integration of what maybe you and I would consider like Bitcoin natives, people who are trying to build these mining facilities with some of these more kind of oil and gas or energy native organizations?
Well, it's interesting. So absolutely in the past couple months, we've seen a proliferation of perhaps creativity in what sort of energy sources and types can be applied to mining and vice versa. And so it's not just oil and gas, and it's not just, standard sort of known sustainable sources like wind and solar, but we're seeing everything from, like compost materials to like tires and all sorts of materials that can be used to extract energy from. And folks are looking at at modeling the scenarios to see if money can be made there. And of course, when there's free energy, there's an ability to monetize that with mining. And so folks on the energy side are, I think, getting really smart. They've gone up the learning curve with Bitcoin. They know that they can supplement and add a revenue stream to what they've already built by introducing mining, which can, of course, as you know, be done intermittently. And so it's a great match for lots of different modes of energy. And I think that, people are making a variety of experiments right now. And so I imagine in 18 months' time, we'll have a lot more information, but it's really fun to see the creativity, and entrepreneurial thinking that's happening in the space, including from folks on the energy side that probably have neither thought of themselves as entrepreneurial or as Bitcoin native folks, but Bitcoin, of course, is energy-backed money. And so if you're in energy, you are, soon to be, if not already, in Bitcoin. And we're seeing that realization happen.
When you start to look at the mining, it seems like the technology is also drastically improved, right? I yesterday was talking about mining and I was like, man, when I first started messing around with mining, the S9s were like the cream of the crop, right? Like that was the best hardware you could get. Now, I don't think I know a single serious miner that uses those because the technology is just accelerated so quickly. What are you seeing on that front? Is that something you guys are interested in investing in, is like the actual like hardware, or do you stick mainly to more of the software on the investing side?
This is a great question. So a lot of folks are curious about where venture capital's focus is and what arenas are a great fit. So historically, my work has been focused on software, and that's not, necessarily differentiating for Stillmark versus other VC funds. So VC investors typically avoid hardware and focus on software, but that's not true for all. And so if you are developing hardware, it's important, I think, to find an investor set that understands the unit economics of that, the different sort of financial demands and, how to work with you to make sure that your business is run most efficiently so that you can grow at the quickest clip. Now, on the software side, of course, things are very different. When we're talking about serving 1 million people with software, generally we don't have to add many operating costs to get from, say, 200,000 to 1 million. The incremental cost of adding a new user are very small when we're talking about hardware. When we're talking about software, the opposite is true when we're talking about hardware. And so they're pretty different businesses. But for Stillmark on the mining side, there's starting to be more abundance of software opportunities. And so that's where we're really focused, not to the exclusion of looking at opportunities for proprietary mining or hosting or, the development of new hardware. We could do those things. We probably want to do that with a partner on the hardware side, meaning someone in venture that had worked with hardware investments before. But more recently, we've seen software emerge to really have a significant role in the mining space. So to give you a quick example of that, this is from the portfolio. We led the seed round for Satoshi Energy, which is a company that matches renewable energy, sustainable energy projects, wind and solar in Texas first, to mining. And so it adds a revenue stream basically to projects that have energy available when they're not selling into the grid. And so this is an example of, a really great use of Bitcoin's intermittent nature. Wind is abundant at night, and we know that energy requirements are more present during the day. And so it's a great time to mine when you have abundant energy that's not called upon for other purposes. And Satoshi Energy is kind of trying to build the bridge there and help energy projects figure out how to best monetize their resources. So that's an example of a software company in this space. And I'm hoping that we will find others. There's obviously opportunities to allow people to sort of interpret how their hardware is working and to optimize their hardware as an example of where software can fit in. But and we've seen attempts at matching mining opportunities or a mining marketplace with retail participants. And so my hope is that this continues to mature to sort of advance the sector of mining, and that, when there's a strong software play, we want to be right there. What about you, Pom? Have you invested in the mining space yet? It sounds like you have.
A lot of people probably don't know. That's how I got into cryptocurrencies. I actually started, somebody pitched me mining back in 2016. It wasn't pitched from like the crypto angle of like, hey, this is, what Bitcoin or cryptocurrency or whatever it was. It was just like, hey, these are data centers, right? And they were kind of souped up. My family had a background in data centers, so I understood it decently well. And I started out mining with GPUs, mining ETH. And then my friend and partner, Jason Williams, we started talking more about it and started thinking about, hey, how does this exactly work? And at the time, he was the CEO of a company called PRTI, which is kind of an off-grid, vertically integrated power producer. So what they do is they take used car tires, they basically burn it at really high heat in some technology and infrastructure that they built, and it produces oil, gas, carbon, and some other outputs. And then they're basically able to produce power off the grid. And so the idea of the business originally was like, hey, why don't we just go sell it back to the grid and get paid, whatever it is, 3-4 cents per kilowatt hour. Instead, we ended up actually building a Bitcoin mine there on site to basically take that power and just use kind of, you feed in the tires, you create power, and then you consume that power on site with Bitcoin mining. And so it's fascinating because a lot of people, I think, that do some sort of mining as like an individual where it's not a business they started. It's very much like kind of cloud computing. Like, oh, I sent some money somewhere. Like somebody like got the machines. They maybe send me a picture. I can go online. There's like a dashboard, but like you don't see all of the like operational complexities that go into it. And so, God, I don't know how much money was spent / wasted trying to figure out like the air conditioning. Like, how do you keep the machines cool in the summer of North Carolina, right? How do you do, cable management? How do you actually ensure that things are optimally set up? And what was unique is that, like, I understood enough to be dangerous, but like by no means am I a electrical engineer. Am I, in any way, shape, or form suited to go build one of these mining facilities myself. But because of the business in the power production component, they had so many highly technical people there who literally built a off-grid power production facility. They're just geeking out. They're like, oh, we could do this and we could do this. And like, here's how you do it. And like, you really understood, like kind of like go to the metal and understand how these machines work. And so it was, frankly, more than anything, it was just a pure education experience for me. And then you realize, like, I don't know how big it was. It wasn't, huge. But there's like thousands of these facilities, hundreds of these facilities around the world. And that makes up, the Bitcoin decentralized network. And so it's just like a really cool experience. And then
is that center still mining?
It is. The idea is it's a great kind of concept of like off-grid, vertically integrated power production with the consumption of that power not going to the grid, but actually being Bitcoin mining. One of the challenges is that it's incredibly expensive to build the off-grid power production, right? Kind of low 8 figures cost there. And so as they continue to do that, part of their plan is to continue to build out these vertically integrated mines. But it's just it's a capital game. And so I think what we're starting to see now is like, this is one of the reasons why a lot of these miners are saying, hey, we can go and like race around the world and try to find, low cost energy. But you also know what might be pretty cool? Why don't we just go to the energy producers and be like, let's partner?
Exactly.
Right? Like, you guys got the energy,
exactly.
we got the machines and knowledge. Like, let's come together and, we'll go be great miners.
Yeah, that's exactly right. So that's one of the realizations that Satoshi Energy had, that was something that, was going to exist as this sort of really reciprocally beneficial, healthy relationship, and is there to sort of ease the pain points of forming these new relationships, including sort of the legal complexities of it, which I imagine that you're also very familiar with. But it's great to hear that you got into the space through mining. And I sort of did. So, one of the ways that I was really pushed into Bitcoin in 2013 was that I happened to end up at a co-working space for entrepreneurs to help one of our portfolio companies at the time. And I was sitting next to a guy that was mining like with a machine on his desk. And so that was 2013. And that I did not start doing the exact same thing is, such a painful memory. And I'm sure in 10 years, I'm going to be thinking the same thing, that I don't have, like a whole facility set up is probably, a bad decision for sure. But I was also sort of pushed into the space by the curiosity and fun really of mining. And so it's fun. It's nice that we share that same story. How are you thinking about mining now? Have you seen entrepreneurship advance in the space at all in a way that sort of clicks with you given your operating background?
Yeah, I mean, my general sense is that there will be some, kind of outliers that like somebody can go build a great mining business from scratch and do it again. My biggest takeaway, I think, was just like how capital intensive it is. And so now I kind of look at it as you either need to have a significant technical advantage. So, did you create chips? Did you create some ASIC? Do you have some kind of power production, arbitrage? Like, what is the technical advantage you have that can't be replicated or closely kind of followed by others? The second thing is you're a brand new business, but you just have immense access to capital and you're able to kind of bully the market a little bit with that capital base. Or the third thing, and actually where I think a lot of the value is going to accrue over time, is you either have a special relationship or you have the backing of one of the large energy producers. Like, if ExxonMobil wants to get in the game, they are going to very quickly become one of the largest miners, if not the largest miner in the world. And really the limiting factor there ends up just being like, how quickly can they get enough hardware? Right, but they've got the energy, they've got the talent, they've got the capital. Like they have all the ingredients. It's just they don't produce the ASICs themselves, and so they're gonna have to figure out what the solution there is. And so if you kind of run around the world, you're like, okay, cool. You've got Exxon, you've got some of these businesses, but then like, what happens when all of a sudden the Middle East is like, you know what? I got a great idea. What if we don't have to transport the energy? Instead, just like right here on site, we can go and like essentially become, owners of this brand new digital, ecosystem. Like,
right.
It's going to happen.
The competition will always be around the cheapest source of energy, like just as you said, technological advancement or some sort of edge that you have through proprietary technology. And then, of course, just simple. Today, the competition still exists around simple operations. The professionalization of mining, I think, is just a few years old, really. That's one of the opportunities actually that Blockstream saw. That I'm on the board of directors at Blockstream, and Blockstream has sort of built this really, robust mining operation that allows enterprise and financial institutions to host with them in a professional way. And, these are sort of really obvious opportunities in the space that entrepreneurs are taking advantage of, like Blockstream did with enterprise grade hosting. Satoshi Energy has done in this matching marketplace and data insights software provision. And now we're just, we're starting to see new ideas percolating. And so, I'm hopeful that Stillmark will be able to partner with entrepreneurs in this space for sure. I think there's still a ton of opportunity.
Yeah.
For example, when you're talking about gas and oil, large participants coming into the space, they're going to need to find, the best hardware. It's not just about, it's not just about access to hardware and ASICs, but a supply chain that is robust and can scale with you and is stable and dependable. We know that miners have, had a problem with that in the past, and there's no reason to expect that that will be any different as hash rate grows through the participation of larger enterprise. And so it's a really dynamic space and probably doesn't get enough attention. And I imagine that will, shift in the going forward.
Makes complete sense. My last question for you is around self-custody. How do you think about, or how do you talk to entrepreneurs or even just people that you talk to about Bitcoin in terms of 100% self-custody, 80% self-custody, and then use Bitcoin on some of the various platforms, whether they're yield generation or there's some sort of like regulated custody solution? Like how do you just think about I don't know, I call it the dream Bitcoin like allocation from like a custody standpoint?
Well, that's an interesting question, because I think for us, it seems like the default answer to that question is that companies want to have 100% self-custody, with the exception, potentially with the exception of when there's known transactions or sort of like reoccurring transactions that might happen that require, a simpler experience than multi-sig, now provides. So self-custody has been, it's one of the conversations that comes up in a bear market. People have time to sort of think about how they're managing their treasuries, how they're securing their BTC in the treasury. And then, of course, individuals are thinking about, sort of best practices and how to prepare themselves for the next bull market or even just Bitcoin's ongoing maturation. And so self-custody is generally the first thing that people think of. And it comes up in conversation for me quite frequently. If people look at the Stillmark website, they'll often say we're using Casa for self-custody, and that includes businesses. And so I think that, there's more businesses now, like Bitcoin native businesses launching, that know that they want to include Bitcoin in the treasury as well as a responsible, custody management solution. And so, fortunately, the state of that portion of the market has matured to the point where, you have options, you have really good opportunities to have this easy experience of managing your Bitcoin and being your own bank. And so, I think that sort of just at this point is table stakes for companies that have Bitcoin in the treasuries to have a self-custody solution that works for the company and where your business practices can be as consistent as the technology itself. And so what I mean by that is just that the way that if you have a multi-sig self-custody solution, the operating practice behind it is known and is repeatable and is something that can be maintained if you're switching, including if executives are switching out. And so it's not, what we like to see at Stillmark when we're looking at companies that come to us and already have BTC in the treasury, we like to see that there's a secure self-custody solution in place that includes multi-sig. But on top of that, we like to see that there's a documented process of key management. And so that it's not dependent on any one individual or even a set of individuals. It's just dependent on a repeatable process. And so that would be, I think, an important part of, treasury management and financial responsibility. And, of course, we're seeing Bitcoin founders really sort of get that and take that seriously.
When you start talking to newbies, how do you get them to try self-custody? Or like we do a bunch of work with Ledger, and I just hammer, like, make it easy, make it easy. How do you reduce friction? How do you get that person who's like, what the hell is self-custody? I've never heard of this before. How do you get them to try? Like, what do you do?
Well, so that is such a good question. I think I need to actually spend some cycles on this. So what we used to do, frankly, is wait for Coinbase to make a mistake, people to feel burned, and then you get them a ledger, right? Or you help them onboard to Casa. And some of the mistakes, I think, or change a policy, right? And so, people know what they want and expect from Coinbase or from other sort of custody providers. And those rules are changing. And so, happen. They've always sort of been in a state of flux. And so, for those of us that advocate for self-custody and for the be your own bank solution that Bitcoin offers, I think the time to really help convert people is when there's a policy shift that doesn't resonate with people or feels off. And so that's what I did in prior cycles. And in the current cycle, I think what I'm hopeful for is that the signal rises above sort of the noise of the bull market, and frankly, that of some altcoins and crypto spaces. And part of that signal should be around self-custody. And by the way, when we're talking about this, we don't have to talk about it as self-custody, as multi-sig, or with using any technical terms. I think that, we can sort of like meme into existence, be your own bank, a bank in your back pocket, and sort of creating a narrative that feels more approachable and similar to, like the millennial experience of a neobank, for example, is a way for Bitcoin self-custody to really win here, which of course is a win for the end user and the person holding the Bitcoin. And then on top of that, of course, if you're holding your own Bitcoin, there's just more you can really do with it. You can get more use out of it, utility. And so that's sort of the secondary conversation to the self-custody talk.
Yeah.
Tom, are you switching friends and family over to ledgers and other self-custody solutions now that we have some space in the bear market?
So I'm not a believer that any strategy is 100% the only right thing, right? And I kind of think of it like dollars, right? Most people have they have some payment apps, they've got a bank account, maybe they have multiple bank accounts. Some of it they are investing. Like there's a strategy of maybe not pursuing pursuing diversification for diversification's sake, but just naturally as you use things and it has utility, you end up having different applications, interfaces, use cases, etc. And the way that I use Bitcoin is very similar to that. So some of it is in more secure kind of offline manner. Some of it is in areas where it's rehypothecated. Some of it is used to make investments. Some of it is used on an app like Strike to be able to send or receive with people. Like I end up using it in different ways. And so when I think about that, it goes back to this idea of like 100% in one single thing is probably not the way that most people are going to interface with any asset, but specifically something that needs to serve as kind of this digital cash. But what I do think is really important is helping people understand, like one of the main value propositions of Bitcoin is the self-sovereignty aspect, that, not your keys, not your coin. And so whatever that percentage is for you, and everyone I think is different, like understanding how to do it. And so the way that I actually start with folks is just like, hey, take $5 worth of Bitcoin and just move it throughout the ecosystem. Buy it on an exchange, move it into self-custody. Put it into, one of these like retirement platforms. Then go buy another $5. Move that into, cold storage. Like just move it around. And what you will find out is like you're learning. And then, hey, you're going to make a mistake, right? And if you lose $5, like you'll be like, oh, damn, that was stupid. But like you lost $5. It's worth the education. And so that's actually where I usually start, is just like getting people to kind of try to move it around. And one is like, it's cool because there's like an aha moment. Like, oh, wow, like it just moved. Like, oh, I see, like I did that, right? And then the second thing is like, there is something cool when people are like, you mean to tell me that like the Bitcoin is in my hardware wallet and nobody, like I'm not relying on anybody. Yeah. And they're like, oh, that's badass, right? Like there's this element of like, this is cool.
Yeah. And people get that when you're holding Bitcoin yourself, no one can change the rules on you. And so I think that that's something very special. But you're absolutely right. Bitcoin should be able to meet people where they're at and in the ways that they want to engage with it. And so, of course, we all have $10, $20, $100 in our Lightning wallets. But I think that the foundation should be around the value and possibilities of being your own bank. And being your own bank, of course, it should include both a savings and a checking account or something that feels like that. And so there's absolutely a mix that can be had between, a ledger, another sort of self-custody solution, a hot wallet, and, potentially a third-party custodian. But when you're using the third party custodian, you want to be doing so really because you understand the trade-offs and feel that you're benefiting from that, not because you feel locked into doing that because
Correct.
you can't be your own bank. And so, I hope that that's another sort of, message that becomes more broadly understood in this time where we have more opportunity to focus on signal and education.
Yeah, I couldn't agree more. Where can we send people to find you on the internet or find out more about Stillmark?
I'm on Twitter at Alyse Killeen, and Stillmark is stillmark.com. And at stillmark.com, we have email links for founders and also for other folks in the community to reach out.
Awesome. Alyse, thank you so much for joining us. I always enjoy these conversations, and we'll definitely do it again.
Thank you, Pomp.
All right, have a great day.
You too.
All right, everyone. I really hope that you enjoyed that episode. I did. These episodes are brought to you by FTX US. You can go click on the link in the description to learn more. FTX has super low trading fees, sometimes as much as 85% cheaper than any of their competitors. They also are introducing digital stock trading to their application. What that means is you'll be able to trade stocks right next to where you trade cryptocurrencies. Those stocks will come with no transaction fees and no payment for order flow, so you get much better pricing. FTX continues to innovate in financial markets, and they are very quickly becoming one of the most important crypto exchanges in the world. Go check them out by clicking on the link in the description and go create an account at FTX today. Hope you enjoy these interviews. We'll be back with more soon.